Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Good day, good morning, good afternoon, wherever you are. How are you guys doing this afternoon? Let me know how you're doing in the comments box below, guys. How many times, as soon as you open a trade, the price started moving in the opposite direction and you were left wondering, what have I done wrong? How many times have you lost money by trading on a 1-minute chart? Don't give me the answer. I already know. Today, I want to do a short course for beginner traders. So, guys, if you have any questions, please feel free to type your questions. And towards the end of the webinar, I will do my best to answer every single one of them. For the ones of you that don't know me yet, my name is Andrew. And for the last 10 years, I've worked in many retail and institutional forex brokerages in Europe. The course today is about technical analysis and how to read the charts. We will see how the assets are moving on a daily basis and what the key for the price actions are. Are you guys ready? Let's get started. Don't forget to absolutely smash that like, share, subscribe button at the bottom of the page, guys. Chart analysis and technical trading coming up. Right, big welcome everyone. Good afternoon, good morning, good evening, wherever you are. Today, we're going to talk about chart analysis and how to read the charts and technical trading as well. Get your notebooks ready, get your cup of coffee, and let's get started. Now, what is happening on a chart, guys? How to look at a chart? What are the time frames that we use? And what technical indicators mean? What are the support resistance levels? I will try and answer all these questions in the next 20 minutes or so. First of all, first and foremost, the most important thing when you're looking at a chart is looking at it the right way. What does that mean? First of all, at the top of every trading platform, you're gonna find the time frames. Yeah, you're gonna find a bunch of numbers together that indicate the time frames. In this case, I'm using a 1-hour chart, which means every green or red candlestick you see on the chart represents 1 hour. Every candlestick will open and fluctuate for 60 minutes. What I care about is the movement that happens in the next 2, 3, 4 hours, and not the movement that happens within the next 5 minutes or so. So first of all, to look at the chart the right way, I need to understand the bigger picture. Therefore, I'm going to go on a 1-hour chart or a 4-hour chart by changing the time frame, and then I'm going to zoom out. I need to understand the bigger picture. I need to understand how the asset moved in the last month, in the last 2 months, in the last 6 months, so I can try and predict what's going to be the next movement. In this case, we're looking at Crude Oil Wti futures on a 60-minute chart. Okay, so looking back in time, we see that on the 29th of January, crude oil was trading at $52.18. We saw a rally in the oil price going all the way up to $67.90. And then we saw the oil price dropping again. Okay, this is the bigger picture. Usually, whatever goes up must come down. Now, once I understand the bigger picture, I'm going to focus on my entry, which is where the price action is. So, this blue square basically represents the price movement in the last 24 hours, guys. So, what can we see? In the last 24 hours, oil went from 59.44 all the way up to 60.72, 60.77, somewhere there. And then it came back down. Okay, it got rejected by this support level that we all see here at 59.09, and now it's trading a bit higher. Okay, what I can also see by looking at this chart is that the market is ranging. Okay, it's moving sideways between average highs and average lows. So as soon as I establish which are the average highs and the average lows, okay, I can try and calculate my entry or my exit, okay, from the trade. My entry, so I avoid a big drawdown, and my exit, so I avoid the market turning around, and all the profits I've realized till then will all be lost because I did not close the trade at the right time. Okay, so this is what's happening with crude oil WTI. It started the ranging market on the 18th of March, 2021. Okay, and it's currently trading at $59.95. Okay, now from here on, I have two options, guys. Either I'm going to see the price pushing high, exactly where it was before. Okay, if you look left, you're going to see that that's where the price was before. And if you zoom out, you're going to see that it touched the same level once again, and moving towards the left, you're going to see it touching the same level twice again. Okay, so that means that level is a very important technical level. Okay, so very likely the price will go there to test the level, and from there on, it will either decide to break out, okay, and move at the next level, or turn around, okay, and come back down. The logic in trading is very simple, guys. Buy when the price is low and sell when the price is high. You'll always try to predict the next movement, the next price movement, okay? Let's take the center of the chart, for example. Okay, when it would have been an interesting time to open a buy position, somewhere here, somewhere down here where I see the price constantly being rejected by the support level. Okay, so I can open a buy position down here at 59.25, assuming, predicting that the price will move higher. How high it will go, we don't know yet. However, the previous high is a very, very good indication on where the price might stop. Okay, so in a case like this, my goal will be to literally ride the price going up, okay, from that price, okay, 59.28, all the way up to 61.41. What's good to know is that I can close the position anytime I want. I can set a stop loss. I can set a take profit level. So my position will close automatically, okay, regardless, either with a bit of a loss or with a bit of profit. Okay, this is how crude oil WTI moved in the last few days. Now, let's have a look at the euro US dollar, guys, the most traded currency pair in the world. The most liquid currency pair in the world, which is currently trading at 118.83. Again, on a 60-minute chart, which means every candlestick, green or red, represents 60 minutes. Once again, I need to understand the general picture, okay, of is it an uptrend? Is it a downtrend? What happened with the euro versus the US dollar in the last few weeks or few months? Okay, and in this case, again, it's very, very easy to understand what happened. We see that on the 25th of February, the euro was trading at 122.35 versus the US dollar. It started a downtrend that lasted until the 31st of March. All right. From the 31st of March, okay, we see a correction starting. This is what's it called. When the price is trying to go back up where it was before, it's called a correction. Same applies after a rally to the upside when the price turns around, trying to go towards its previous values. So, in this case, as a trader, I have a couple of options. One, I can go short if I predict that the euro will drop for 2 months or 3 months, for example, okay, or 1 month. I can predict that drop, and I can take a sell position when the euro is trading at its highs and simply keep that position open until I decide enough is enough. Okay, either you can set a take profit level, okay, and your position will close at a certain price, or you can just go with the flow, ride the trend. As long as that trend continues and you're on the right side of the trade, then you have nothing to be worried about. But whatever goes up must come down, and this is the example, and whatever goes down must come back up. Now, before I move on, what caused this drop in the euro versus the US dollar, guys? Okay, and this is very simple to understand. Let's try and remember the times we're living in. What happened a couple of months ago? Why did the euro suffer versus the US dollar? What happened in Europe and what happened in the States? First of all, the US started vaccinating the population way faster than Europe, okay? And that contributed a lot to the weakness of the euro and the strength of the US dollar, okay? Second of all, Europe is still struggling to vaccinate its population, okay? Then we're looking at banks injecting cash in the markets, okay? So we had the Federal Reserve and we had the European Central Bank printing a lot of money, okay, and lowering the interest rates to help the economy recover faster, yeah, after this bloody COVID virus that pinned the economies worldwide, okay? So based on this, the euro has dropped versus the US dollar. Yeah, the US is doing a bit better. They are recovering faster. Okay, they have good targets for the economy. The population is getting vaccinated faster. Therefore, okay, Europe is struggling. Therefore, the drop in the euro. Now, obviously, that has to stop. Yes, so it's very unlikely, let's say. Okay, I wouldn't say it's impossible because compliance might contradict me, but I would say it's very, very unlikely to have the exchange rate of two major currencies going down to zero. Would you agree? All right. So what does that mean? The downtrend will eventually stop, guys. Okay? It cannot drop forever. It will stop after a day or two or three or a month. It will stop. That is a perfect time to look at the markets. And if you see the correction starting, it would be a perfect time to enter with a buy position somewhere down there. Yeah, because the price is very, very low and you're anticipating that the euro will start strengthening. Why will the euro start strengthening? Well, probably because the European Union realized the trouble they're in and they started vaccinating the population faster and they started distributing the vaccine faster. Okay, the lockdown measures contributed a lot. The less lockdown measures you have in Europe, the stronger the euro will very likely become. Why is that? People are going back to work. Yeah, people that are going back to work have money to spend. On the way home, they're going to buy a beer. They're going to buy a kebab. They're going to buy something, okay? Fueling the economy. So, okay, the euro should strengthen a bit. Now, let's have a quick look at the euro's movement in the last 24 hours, guys, and see what happened. There we go. Yeah, so we saw the euro trading flat, more or less for a few hours. Remember, every green or red candlestick represents 1 hour, That's the time frame that I'm using to look at the charts. Then we saw the euro starting at midnight, basically, okay, pushing a bit higher once the Australian trading session opened. Okay, we saw the euro pushing a bit higher. It pushed higher the entire Asian trading session as well as the European trading session. And as we get closer to the US markets open, guys, okay, we see the euro pulling back a bit. Okay, and if I zoom in a bit more, you're going to see the last two candlesticks are red. What does that mean? It means for the last 2 hours, the euro started dropping. Okay, now where do you anticipate this drop to stop? Okay, I'll give you an example. It might stop somewhere there. Okay, or it might stop somewhere there. Okay, this is what no one knows. Okay, or it might completely turn around and continue the uptrend. But what's worth noting, guys, if you're looking carefully at the charts, you're going to see that after every rally, okay, there will be a bit of a pullback. You're going to see the price pulling back a bit. Why is that? The buyers, the ones that opened buy position here, are now closing their buy positions to cash in the profits. Okay, because remember one thing, guys, when you're trading on a trading platform, when you're trading online, you haven't made any money and you haven't lost any money until you close that position. Okay, while your position is open, anything can happen. When you close the position, then you're marking the profits or the losses. Okay, so this is what is happening with the euro in the last 24 hours. If I decrease the time frame, for example, to a 15-minute chart, I'm going to be looking at the exact same chart. Okay, the difference is I'm going to see more candlesticks. Okay, this is the only difference. Yeah, this is a 15-minute chart. This is a 1 hour chart. Yeah, it's the same price action. There we go. Yeah, as we look at the charts, we can see the pullback happening. I'm going to move it to a 5-minute chart to see it a bit better. Okay, when I move it on a 5-minute chart, basically I'm zooming in. Okay, and I see a lot of candlesticks. Okay, so this is what happened. Okay, with the price of euro versus the US dollar. Okay, in the last, and you can count the candlesticks if you want, 5, 10, 15, 20, 25, 30 minutes. In the last half an hour, the euro started dropping a bit. Is that supposed to worry me? Definitely not, because my trading goal, okay, is to catch the activity that happens over an entire day, over 12 hours, over 8 hours, over 24 hours. So if I see a bit of a shake off in the markets, I'm not going to be worried about it as long as I have a healthy trading account. Okay. This is how it works. Let's have a quick look at the pound, guys, and see what happened with the pound. Again, 1 hour chart. Yeah, I'm zooming out to try and understand what happened. I'm looking at the charts from left to right. Yeah, so I see the pound was trading very low towards the left-hand side of the page. Okay, somewhere there. Okay, and when was that? That was on the 4th of February. Okay, so February, March, I see the price going up. Okay, it stopped on the 25th of February. Since the 25th of February, we see the pound weakening a bit. Okay, this is the overview. And now I'm zooming in a bit more to try and understand the structure of the market as we speak. Yeah, because from here to here, okay, it's that's 24th of March, and this is 5th of April. Yeah, so I'm looking at the movement over 2 weeks. I cannot sustain a drawdown like that over 2 weeks. Yeah. So I'm going to try and position myself on the market where the price action is, trying to speculate, trying to predict the bigger movement. Okay, always, the markets will be attracted by the previous values. You're going to see the price of an asset going up for a few days, and then you're going to see it coming down, again, purely because the buyers that opened buy positions down there when the price was low are now closing their buy positions to cash in the profits. And probably you would do the same, if you open a trade and you make $300, $400, $500, let's say, or maybe more in a couple of days, you will want to close that trade, and cash in the profits. Okay, so this is what is happening. Now, looking at the pound, okay, what's happening with the pound? Again, we can see it dropping. Okay, so it might be an interesting idea to try and short the pound for a bit of time. I also have on the charts technical indicators, guys. Okay, all those lines you see at the bottom, that yellow and that red line that you see in the center of the chart, they are technical indicators, which help me kind of predict where the price might go, or what might happen. Okay, 137.98 for the pound as we speak. RSI, stochastic, the two indicators that I'm using are pointing downwards. Okay, I'm just going to make the RSI a bit bigger. There we go, So the RSI is indicating a lot of weakness in the markets. Okay, the stochastic is indicating the same thing, which is the second indicator that I'm using, because you need at least 2 or 3 confirmations before you open a trade. Okay, on the logic that if it looks like a duck, it quacks like a duck, it walks like a duck, it's a duck, right? Right, let's move on. Let's have a look at the US dollar. There we go. USD JPY. What do we see here? That for the last, I don't know, I can't really count the candlesticks now, but let's say for the last 24 hours, okay, the US dollar did not move a lot. Okay, the price went up a bit, down a bit, up a bit, down a bit, but it's more or less where it was yesterday. Look what happens now. Okay, the market started picking up as we get closer to the US trading session. The European trading session is open. Okay, and we see a bit of activity happening there. Now, some traders will say it's wise to open a buy position down here, keep it open for an hour or two. Okay, as the overall trend is a downtrend. We can see the market moving up a bit, then dropping, then moving up a bit, then dropping again. So it's a downtrend. Now you have two options. Either you go for the short term, okay, anticipating something like this will happen, and then if the downtrend is to continue, then you can go for a sell position, there. Okay, and if you see the market turning around, you can go for a sell position, anticipating that the price will continue dropping, will continue the downtrend. Sometimes the price will surprise you, and me as well, and every other trader out there, because the market is affected by the news, okay? I'm going to get to that in a second. So now I hope you understand it's not a must to trade every day. It's not a must to trade all the assets. It's not a must to necessarily buy or sell. Okay, you can wait and see what's going to happen. You can predict the next movement. You wait for that to happen, and then if you are right, then you're increasing the chances of being successful. Okay, with that trade, you will not have every trade successful. I can tell you that after 10 years of trading, guys. I had good days. I had bad days. I had bad weeks and months. It depends very much on what's happening on the markets. Now, the Aussie dollar, guys, which many times, almost every time, is moving along with the European currencies, versus the US dollar. So if you see the euro dropping and the pound dropping, then very likely the Aussie dollar will drop, as well as the Kiwi dollar, the New Zealand dollar. Now, what happened with the exchange rate of the Australian dollar? Okay, again, I want to see the big picture. I want to see what's happening. Okay, so we see the Aussie dollar was at its highs, it's 0.80 on the 25th of February. And since the 25th of February, it started dropping and dropping and dropping. Okay, now the question is, where is this drop going to stop? Okay, now I'm zooming in. I'm moving closer to the moment where I'm going to open my position. I need to understand what's happening. What do I see? Okay, I see the Aussie dollar entering some sort of a ranging market. Okay, it didn't continue the downtrend anymore. It started moving sideways, and that's a red flag for any experienced trader. You know that a trend always ends with a ranging market. Okay, so when this asset starts moving sideways, then you either expect a breakout eventually, and then the price will try and go back up to its previous values. There we go, or it's going to continue the downtrend, moving lower and lower and lower. And at that point, you have to zoom out, okay, eventually go on a higher time frame, like a 4-hour chart, for example, okay, and try and look left. There we go. Okay, there we go. So it has plenty of room to go. Okay, it went up for quite some time. Then it started dropping in February. Okay, so it might go somewhere there, okay, in a month or so. It depends very much what's happening in Australia, guys. Depends very much what's happening in the US as well. Okay, and it depends very much what's happening with the gold price, as Australia and the Australian dollar and gold price usually move in the same direction. Simply because Australia is a huge exporter of precious metals. They export most of it to China, as it's closer to them. Okay, therefore, we're going to see the Aussie dollar and gold many times moving in the same directions. This is how the Australian dollar moved in the last 24 hours, guys. So we saw it pushing higher, let's say, on the Asian and the European trading session. Okay, then we had the US markets open. Okay, so once the US markets opened, the Aussie dollar started giving back some gains. We had a lot of traders closing their buy positions, and we had a lot of traders opening additional buy positions, pushing the price downwards. Okay, you can see in general the movement is very similar. Okay, you can see the price going up and then the price going down. Okay, if you wait long enough and your prediction is correct, you don't have to be afraid of this pullback, but you have to be on the right side of the trend. Okay, if it's an uptrend, you have to be with more with buy positions on the side of the trend. If it's a downtrend, then obviously you're going to be looking for more sell positions than buy positions. Right, USD CAD. What happened with the USD CAD? Again, we saw it trading at its lows on the 18th of March. It started going higher slowly, and then we see a U-turn. Okay, that ended on the 5th, a couple of days ago. Okay, since then, we see the US dollar versus the Canadian dollar strengthening. Again, 126.18 is the price as we speak. You can see a bit of volatility there. Okay, and the US dollar is basically trying to push a bit higher. Okay, versus the Canadian dollar. However, let's not forget something. The overall trend is a downtrend. Okay, for the US dollar. Right, the S&P 500, guys, the benchmark for the U.S. economy, and the Dow Jones closed yesterday, closed the last couple of days at record highs, guys. Okay, we can see the S&P 500 trading at 4,073.94, And we're looking at the Dow Jones, which copied the movement more or less. Okay, again, trading very, very high, 33,430.84. Okay, is the closing price yesterday. Now, at in exactly 1 hour from now, we're going to have the U.S. markets open, guys, and we're going to see what will happen. Now, there is a big probability, looking at this gap, okay, that we see here, that the Dow Jones and the S&P 500 will move lower, to test this yellow line, okay, this 50 exponential moving average that I have there, and also to move there to close the gap, okay? Whenever you have gaps like this in the markets, you're going to see almost every time the gaps will be filled sooner or later, okay? So it's very, very important to know where to position yourself on the markets. For example, in this specific scenario, I can do two things. Obviously, I cannot position myself on the markets right now as the U.S. market is closed, and no orders are taken, but I can wait for the U.S. markets open. At that point, I can go on the market very, very quick with a sell position, anticipating that the gap that we see there will be closed, which means the price will move somewhere there in that region, somewhere around the 33,226.11. Okay, or I can wait for the market to pull back, confirm that it's closing the gap, and then if I see it bouncing off that 50 moving average, or that level, then I can go in with a buy position down there, anticipating the next movement. Okay, and what do we know, guys? If you don't know it, I'm going to tell you now. Stocks and indices are designed to go up by nature. Okay, stocks are listed on the stock exchange. Every parent company wants its share price to go as high as possible. Okay, what is an index? It's a basket of stocks. You have in this example, for example, let's look at the S&P 500. Okay, what does the number tell you? You have 500 stocks, 500 companies that form the S&P. Okay, the Standard and Poor. So when you're trading indices, you're trading on the overall performance of those stocks. When you're trading stocks individually, sometimes you're going to dodge a bullet, sometimes you won't, because you're trading that stock individually. Okay, and anything can happen. Right. Now, we're looking at the US dollar index, guys, which is basically the benchmark that shows you the strength or the weakness of the US dollar against its other peers, its other 6 major currency pairs. Okay. Now, what do we see? Very big downtrend for the US dollar index. So overall, we see the US dollar dropping. Okay. Let's have a quick look at the S&P 500 or the Dow Jones and see what happened with the Dow Jones in the last few days. You see, they're moving in the exact opposite directions. Okay. Whenever you see the stock market strengthening, then expect the US dollar to drop a bit. Okay, this is the correlation. You're going to see a lot of assets are correlated to the US dollar. Okay, again, this is the movement of the US dollar index in the last 24 hours or so. So what do we see? The US dollar suffered a lot on the Asian trading session, on the European trading session. And as we get closer to the US markets open, we see a green candlestick. We see that the US dollar index is doing a bit better, is pulling up a bit. However, the downtrend remains. So I'm going to keep a very close eye, on this level there. Because if I look in the past, I'm going to see that the market created lower highs, and also lower lows. Look, if I draw, two horizontal lines like this, basically, this is called a trend channel. Okay, so now you can understand better the movement of the markets. This is a trend channel. So now I see the price literally getting rejected every time it gets somewhere close to those lines. So I can anticipate an upwards movement, to that level, and then one of the two will happen. Either the US dollar index will continue the downtrend, and at that point I'm going to go with a sell position, anticipating a downwards movement, or I'm going to see it pushing higher, As long as it's pushing higher than this level, then the previous high, basically, then I might be looking at a correction of the markets. So I might be looking at a potential uptrend. And then the price will start moving upwards, just like it did here in the left-hand side. It moves up a bit, it pulls back a bit. This is how it works. Now, check this out. Very, very interesting. correlation. This is the US dollar, yeah? And this is gold price. Okay, what do we see? What do we notice? What's happening here? We see that gold and the US dollar move in the exact opposite directions, guys. There we go. Okay, this is another trend channel for gold. So we see that slowly but surely it started pushing higher. It started trading above the 1,700 mark an ounce. Okay, now this is the movement in the last 24 hours or so. Yeah, what do we see? We see that gold price got rejected by this yellow line. I'll get to that in a different webinar, guys, and explain to you what these moving averages represent. Okay, so I see this this spike, yeah, to the downside on the last green candlestick. That means a rejection. Okay, the downtrend wasn't as strong as we thought, and now we're waiting to see what's going to happen. We might see the price pushing back up, yeah, and if that's the case, then it might be good to buy down there once we get a confirmation that the price wants to trade higher. Okay, as it might trade somewhere higher towards the 1752 mark. Right? Now let's have a look at your favorite, guys, all times favorite, the Bitcoin, the good almighty Bitcoin, which is currently trading at $56,182, which means Bitcoin has lost over $3,000 in the last 24 hours, guys. What would happen with your trading account if 24 hours ago you would have opened a buy position on Bitcoin just because someone told you so? Exactly. Your account would be at tremendous risk right now. So very, very careful. This is what happens with cryptocurrencies, guys. They are the only asset class that have the ability of jumping up and down $3,000, $5,000, $10,000 in a day or two. You're not going to see this happening with the currency pairs. You're not going to see this happening with commodities. Yeah, otherwise the entire imports and exports spectrum worldwide would be turned upside down. So Bitcoin, this is how Bitcoin moved in the last 24 hours, guys. Obviously here it's easy to anticipate the drop. Okay, first of all, because Bitcoin rallied too much, too fast, and it was only driven by the news. Yeah, decentralized assets are only driven by the news and by the investor sentiment. Okay, then another question mark, another red flag is this level here. Okay, we see that Bitcoin for the last few days was not able to break this level, to break the $60,000 mark, which was reached on the 13th of March this year. Okay, so there's not a lot of buying power. Yeah, it's not really accessible to the average person. I don't know how many people you have in your circle that could invest $20, $30, $40, $60,000 and purchase a Bitcoin. Okay, so now it's more accessible to institutions. Now more companies started looking into it. And the retail traders, the average people, are pulling back, basically looking at other coins that are more affordable. Okay, so this is how you look at the charts. This is how you try and understand the next movement. Once the uptrend doesn't manage to create higher highs, this is the uptrend. This was the uptrend, basically. So, higher highs and higher lows everywhere you look. At some point, we saw that the uptrend, stopped. It did not have the power to create another high. And I would have been worried at that point, considering we're talking about the riskiest and the most expensive asset out there. $56,172 for Bitcoin this afternoon. We're looking at Ethereum, which is copying, is mirroring Bitcoin. Ethereum, which yesterday, guys, was trading at over $2,000, $2,138 was the all-time high reached by Ethereum yesterday. Okay, and we see today trading at $1,967.76. Okay, the price moved below the red line, below the 200 moving average, which usually implies a bit of selling power, a bit of weakness in the markets. This is what's happening. Okay, right, ladies, gentlemen, traders, type your questions if you have any questions. We have exactly 2-3 minutes for questions. Let me know how you find the webinar. Let me know if technical analysis makes sense. And meanwhile, while you type your questions, I will show you what is the other factor that moves the price of an asset. Okay, And the other factor is the economic calendar, guys. There we go. Every day we have tons of announcements, tons of economic data being announced worldwide. Okay, so quick look at the economic calendar for Wednesday, April 7, 2021. Okay, my one is set on high importance events and GMT plus 2. So you have to customize your economic calendar based on your GMT. Okay, so what do we see? 6:30 in the morning, GMT plus 2. Okay, we had the interest rate decision on the Indian rupee. I don't trade the Indian rupee, so I'm not going to be affected by that. Now, what happened shortly after 9 o'clock, guys? 9 o'clock in the morning. By the way, at 10 o'clock GMT plus 2, we have London stock market, London Stock Exchange opening. So it opens with a big bang every time. Okay, so any announcements that start from 8:30, 9 o'clock that regard the Eurozone, okay, will probably have an impact at 10 o'clock at the markets open. So we had the Spanish services PMI announced at 9:15, which came out 48.1, better than what economists have predicted. Okay, economists in this case only expected 46. Okay, we had the Italian services PMI, which came out less than what economists were expecting. Yeah, economists were expecting 49 flat, and it came out 48.6. Then we had the French services PMI that came out better than expected. Yeah, when it's green, it's above expectations. German services PMI and the market composite PMI, along with the services PMI in the Eurozone. So all these announcements basically have a strong impact on the euro, yeah, because all these countries are using euro. Also, the euro measures, okay, the services in the Eurozone, in the entire Eurozone. So again, that had a bit of an impact on the direction of the euro. Then we had the composite PMI and services PMI on the pound, which both came out red. Okay, a few minutes ago, as you saw, we had imports and exports on the US dollar. We had the trade balance announced 1 hour ago, which came out negative, yet disappointing negative 71.10 billion versus an expectation of negative 70.5 billion. Okay, the trade balance on the Canadian dollar came out at the better than expected 1.04 billion. Okay, and at 4:30 GMT plus 2, guys, we're going to have the crude oil inventories and the Cushing crude oil inventories like every other Wednesday. Yeah, every Wednesday you have the same event on crude oil. Now, very, very important at 2000 hours GMT plus 2, we're going to have the FOMC meeting minutes, Federal Open Markets Committee. That's what FOMC stands for. And every time they have a press conference or they have an announcement like that, we're going to see a bit of volatility on the US dollar, okay, and probably on the stock markets as well. Okay, so to conclude, the markets, the price action is driven by two factors: technical analysis, that tends to be more accurate, and events, yeah, news release. These news release happens every day. Okay, a lot of countries are announcing imports, exports, services, salaries, unemployment rate. Okay, they affect the markets. However, they only create a big shake-off for that time being. Okay, shortly after that, half an hour, 1 hour after the event, you're going to have the price trying to come back to its initial values. Yeah, so you're going to see a bit of a shake-off of the markets. If you have a very small trading account, then you might be caught on the wrong side of the trade and you might blow up your trading account. Again, how you're using your trading account is entirely up to you. What I can suggest is not exposing more than 5 or 10% from your trading account. Okay, let's say this, for example, you have $500 in your trading account. Okay, how much do you use to trade with? 10%, $50. So all your trades together, or that one trade that you might want to open, should not exceed $50. Okay, so you can sustain a bit of fluctuation in the market. So you can sustain a bit of volatility, which if your trading account is strong enough, then very likely you're going to be okay. Yeah, if you're exposing 50% from your trading account and then you have an announcement that shakes off the market a tiny bit, then you might blow up your trading account. Right, this was it from my side today, guys. Let me know what you think about these webinars. Let me know if you have any questions, any comments maybe. Okay, and I'm going to come back in less than 2 minutes with the US markets open for today, guys. Join me again tomorrow, same time, same place, and you will not be disappointed. This is it from my side, guys. Trade responsibly.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How are you guys doing? Let me know how you're doing in the comments box below, guys. And please remember to absolutely smash that like, share, subscribe button every time you have the chance. It helps us a lot in delivering more great content. Now, let's see what's happening in the markets, guys. After a few quiet days on the markets due to the Easter holiday, the data in the economic calendar started picking up again. And if it's Wednesday, guys, it's the Crude Oil Inventories Day. Let's see what's happening in the markets today, 7th of April, 2021. European stock markets traded higher today as the global economy's outlook brightens, with the UK outperforming on the back of its speedy vaccination program and an endorsement of its prospect from the International Monetary Fund. The US markets point to a mixed opening today, with the Dow Jones almost unchanged since closing yesterday. The S&P 500 up less than 1%, and the Nasdaq 100 futures also moving very little, marking gains of 0.2% pre-markets open. Crude oil prices continue to struggle below the $60 barrel in the wake of last week's decision by the Organization of Petroleum Exporting Countries and its allies to raise oil output by over 1 million barrels a day during the second quarter of 2021. Deliveroo IPO enjoys the first public trading day, trading higher pre-markets open. And Bitcoin gave up some gains from yesterday, trading as low as $56,000 and losing over $3,000 in the last 24 hours. U.S. markets open, coming up. Right, and we're back, beautiful people. Have a quick look at the economic calendar. It started picking up again. We had the services PMI in the Eurozone today. Most of them came out positive, giving the Euro a bit of a boost. We had the composite PMI and services PMI on the pound, guys, announced at 10:30 GMT plus 2 this morning, which both disappointed a bit. Probably that's why the pound tanked a bit today. Yeah, followed by imports, exports, trade balance coming from the US on the US dollar. We had the trade balance on the Canadian dollar, which came out positive. And in exactly 1 hour from now, guys, less than 1 hour, we're going to have the crude oil inventories and the Cushing crude oil inventories. Consensus is expecting a draw of 1.436 million barrels. Let's see what's going to happen today and where oil price will go from there. It's currently struggling below the $60 mark for quite some time. Very important at 2000 hours GMT plus 2, we're going to have the FOMC meeting minutes, guys, which is largely weighted by traders to provide us any hints on where the U.S. economy is going in the next quarter. Now, let's have a quick look at some things to know in the markets today, top 5 things to know in the markets today, guys, and then we're going to move on to charts of the day, signals of the day, okay, and we take it from there. Number 1 on the board, Fed minutes and speakers trade data due. The Federal Reserve will release the minutes from its last policy meeting, adding further nuance to a message from Chairman Jerome Powell press conference that was overwhelmingly dovish. Oh my God, it's been quite some time since I found a word to give me a headache like this. Overwhelmingly, right? That's the word. Overwhelmingly dovish. I don't know what's wrong with me today. Right. They made they may make for an interesting contrast with an increasingly bright outlook for the U.S. Economy. The IMF revised up its forecast for the U.S. growth this year on Monday to 6% from only 5.5% in January. Overwhelmingly, that's the word. Now, let's move on to number 2 on the board and see what's happening, guys. COVID-19 surge pauses. Royal Bank of India hits the Indian rupee. The Indian rupee fell to a 4-month low after the Reserve Bank of India shaved its cash reserve ratio at its latest policy meeting, which was last night, basically, early in the morning for us in Europe. A move that equates to a modest easing of monetary conditions. The Royal Bank of India left its key interest rate unchanged despite another rise in inflation last month to over 5%. The Indian economy is also struggling with a fresh wave of COVID-19. The 7-day average for new infections hit a new record high on Monday, while the 7-day daily average death count has risen to its highest since December last year. India has rigged to surge by accelerating in own vaccination program, albeit all at cost of restricting exports to countries such as the UK. Right, number 3 on the boards, U.S. stocks set to open mixed today as consolidation continues. Dow Jones was up less than 1% after closing yesterday. S&P 500 was up less than 0.1% as well, and the Nasdaq 100 futures were up 0.2%. Number 4 on the board, Coinbase puts our first quarterly figures and guidance out. Cryptocurrency trading hub Coinbase unveiled its expectations for its first quarterly results ahead of its scheduled direct listing later this quarter. The company said it generated more in revenue in the first quarter of 2021 than in the whole of 2020 at $1.8 billion. Well, obviously, because in 2020, let's just say people, I promised myself and I promised that I'm not going to pick on Elon Musk and Tesla. But in 2020, guys, we didn't have Elon Musk and Tesla. There you go. I said it. Pumping a ton of money in the market, driving the cryptocurrency spectrum sky high. So, right. Even the low end at that range implies a handsome operating margin, but the width of it's a reminder of volatility of the company's businesses. The company expects trading volumes to slow over the rest of the year. Right. Well, no wonder with Bitcoin trading as high as 60K, guys. It seems monthly transacting users, its key metric at 5.5 million on average, down from 6.1 million in the first quarter. It has bear and bull scenarios that see MTUs anywhere between $4 million and $7 million. Number 5 on the board, oil struggles ahead of crude oil inventories trading below $60 mark. I'll make you a deal, guys. Let's take a 30-second break, run some adverts from our dear partners and sponsors, and then we're going to come back with the charts of the day and the signals of the day. Are you ready? Good.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, we are back, guys, with the charts of the day, and we're going to move on to the signals of the day in just a minute. So we're going to start with Crude Oil Wti futures on a 60-minute chart, guys. 59.72 for Crude Oil Wti this afternoon. Ahead of the crude oil inventories, we saw a very shy rejection from that 200 moving average to the downside. We see the RSI flat or pointing downwards, bear with me. Right, we see the RSI somewhere in the 50% level, turning around, pointing downwards. We see the stochastic at the bottom, pointing upwards. A bit of mixed signals, but it's absolutely normal ahead of the crude oil inventories. Trade carefully, guys. If you have any trades open on oil, trade carefully. That's all I can say. Right, Euro US dollar today trading at 118.81 on a 60-minute chart. We see the euro gaining a bit on the European trading session today. It started giving back modest gains just a couple of hours ago, ahead of the US markets open. We see RSI stochastic pointing downwards at the bottom of the page. So don't be surprised if you're going to see a retest of that 200 moving average to the downside before or as soon as the US markets open. Now, moving on, we're looking at the cable, guys. The pound versus the US dollar has been tanking the entire European trading session today. It started the day on a positive note, pushed a bit higher, encountered some resistance up there from that 50 moving average, and it started tanking 137.70 as we speak, and dropping, guys, with the RSI stochastic both turning around, pointing downwards, indicating a strong sell. There we go. I think we can see it on the chart how strong that sell is. Right. On the other hand, we see the US dollar versus the Japanese yen, guys, trading this afternoon at 109.85, literally unchanged during the European trading session. Looking at the bottom of the charts, we can see a very undecided RSI. We can see stochastic, again, being very undecided. And the candlestick formations that we see there, again, imply a very undecided market. The worrying thing is that we see a death cross there between the 50 and the 200 moving average, guys. And usually a death cross like that implies a big sell-off on the markets. Now, knowing that the moving averages are lagging indicators, this movement might already have happened, that we see there. However, I can't believe that the movement happened. Let's see what's going to happen next, but I think there's more potential to the downside for the USD JPY pair than to the upside. And also looking at the rally that the US dollar had the last week, it makes a bit of sense that we see a bit of a correction, guys, to the downside. Right, the Aussie dollar is more or less copying the European currencies. We're looking at the Aussie dollar currently trading at 0.7618. With the RSI stochastic both pointing downwards. And if you look carefully, you're going to see the US dollar losing a lot of ground on the European trading session today. Once again, we're looking at it on a 60-minute chart. So every green or red candlestick, guys, represents 60 minutes. USD CAD, on the other hand, is trading slightly higher today. We see a good performance for the US dollar versus the CAD on the European trading session. There we go. And we also see the candlestick formation settling above the 200 moving average. 126.16 for USD CAD this afternoon. There is potential. There is a bit of potential to the upside. Let's see what's going to happen. Right, the S&P 500 and the Dow Jones, guys, we are still waiting for the S&P and the Dow to fill in the gap that they left on at the markets open on Monday. The gap will be filled sooner or later, guys. Very likely we're going to see some movement towards the downside today after the US markets open. Dow Jones the same, is trying to fill the gap. There's the closing price yesterday, and there's the gap, that was left on the markets. Let's see what's going to happen. Stochastic is pointing downwards. The markets were almost flat. The US indices were almost flat today. So let's see. There is potential to the downside. US dollar index, on the other hand, come on, US dollar index. Hold on. There we go. No, the US dollar index is very iffy this afternoon. It doesn't want to react. Okay, no problem. We're going to move it to gold. We know gold and the US dollar index is moving in the opposite direction 99.9% of the times. So $1,737.55 per gold ounce for gold futures. Decent performance, I'd say, on the European trading session. We can see gold price finding a bit of support from that 50 moving average, the yellow line that we see there. We see an RSI pointing upwards. We see a stochastic at the very bottom into the oversold levels, pointing upwards once again, which is good. A lot of positivity is expected for gold futures this afternoon. And if you look carefully at the charts, guys, you're going to understand why. Gold price started dropping on the 5th of January this year. And it didn't stop since. The only slight push we had happened this week, basically, since the US dollar started dropping a bit. Right, what else? Silver futures, guys. We're looking at silver trading at $25.09 and pulling back a bit. No, again, we saw a retest. We saw silver futures finding a bit of support from that 200 moving average there. Okay, after they dropped the entire Asian trading session as well as the European trading session. And now as we get very close to the US markets open, okay, we see a bit of buying power on the market on silver and gold as well, okay, pushing higher. The good thing is we got this rejection from that 200 moving average. Okay, RSI, stochastic, both pointing upwards. There is potential for the uptrend. Yeah, the uptrend already started on silver. Okay, now probably traders are aiming for a correction of somewhere around the 80% mark, or why not, yeah, the 100%, okay, measuring this most recent drop. Right, and now everyone's favorite, guys, we're looking at Bitcoin, the good almighty Bitcoin, which lost over $3,000, and the price moved below the 200 moving average in the last 24 hours, 56,507 for Bitcoin. As we speak, after a few minutes ago was trading as low as 55,698. Okay, there's no point looking at the RSI and the stochastic, as technical analysis doesn't work as well on cryptocurrencies as it does on the other asset classes, on the standard asset classes, let's say. Okay, so let's see what caused this fluctuation, guys. Keep an eye on the news. Let's see what happened with this fluctuation. The bad thing is Ethereum is following as well. Yeah, the same Ethereum that yesterday broke all-time high records, okay, trading as high as $2,150, $2,160 on some trading platforms. Okay, we see it trading today at $1,984.15 and dropping. If it makes any sense, we're looking at the 200 moving average. We see the price moving below, yeah, which usually implies a lot of selling power. Also, the double, triple top that we see there, okay, also indicates a bit of selling power in the market. This is what is happening with the charts, guys. Let's see how the markets will open and what are the trading signals that we can get from investing.com. But please allow me 30 seconds and we'll be back with the signals of the day.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, extra, read all about it. Come and get your signals of the day. There we go. Right, signals of the day provided by investing.com. Once again, guys, do not forget, if you want more trading signals, if you want to try different trading signals, have a look at MarketsX or markets.com, guys, our trading partners, and they have an amazing web platform that provides you trading signals, including the source, directly on the trading platform. It's definitely worth it, at least to have a look at it. Markets.com. Web trading. Now, let's see what investing.com thinks about the major currency pairs today. Okay, and then we're going to have a look at commodities in a minute. We see the euro versus the US dollar with strong buy indications on an hourly and daily chart. Here, nothing is happening on a 5 minutes and a 15-minute chart. We see the pound, guys, the cable with 4 strong sell indications from investing.com. We had a breaking news. Beyond Meat, Moderna rise pre-market, and Li Auto falls. Okay, some stocks are reacting to the latest movement. Okay, we're looking at USD JPY a bit disorientated. I think it's the right word. Okay, with strong buy on a 5-minute chart, on a 15-minute chart, strong buy on a daily, but nothing really in between. USD CHF again, strong sell indicated here and there. The Aussie dollar, guys, has 4 strong sell indications versus the US dollar. Now, this is a currency pair to have a look at if you want to get some trading signals. Euro GBP and USD CAD, both of them have strong buy indications. The Kiwi dollar, just like the Aussie dollar, implies strong sell on all 4 time frames. And as we get closer to the bottom of the chart, guys, we see the euro with 4 strong sell indications versus the Swiss franc. We see the pound with 4 strong sell indications versus the Japanese yen and the Swiss franc as well. This is what is happening on the currency side of things. Now, let's have a quick look at commodities, guys. See what is happening, if we see all green or not. Right, there we go. Mixed signals as we're getting closer to the U.S. markets open. We see gold and silver with strong buy indications. Yeah, on 3 out of 4 time frames. And if you look at the charts, guys, you're going to see there is potential to the upside for gold and silver. They both have to recoup a lot of lost ground. Okay, we see copper with 3 strong sell indications as we speak. Nothing is happening for crude oil WTI and Brent oil. Okay, mixed signals as we're only half an hour ahead of the crude oil inventories. Like every other Wednesday, we see natural gas with 4 strong sell indications and US wheat with 3 strong buy. Okay, and with a strong sell on a daily chart. Now, quick look at. Let's look at stocks, guys. Let's see what is happening with Wall Street. Maybe you want to trade some stocks this afternoon. Let's see if there's anything good to trade this afternoon based on the signals provided by investing.com. We might see the S&P and the Dow opening lower today, guys, or pushing lower to close the gap. So ExxonMobil indicates 3 strong sell positions. Apple indicates a strong sell. With the daily and hourly remaining a strong buy. We see Microsoft with strong sell on 2 out of 4 time frames. Procter & Gamble as well. IBM, strong sell on 3 out of the 4 time frames. General Electric, again, strong sell on 2 out of the 4 time frames. And if we have any positive people among us, if we have any buyers instead of sellers, look at AT&T, guys. 4 strong buy indications on all 4 time frames. As we get towards the bottom of the chart, nothing really big is happening. Okay, we see Goldman Sachs and Bank of America as well as Citigroup with strong buy indications on a 5-minute chart. Let's see what's going to happen after the U.S. markets open. Right, this is it from my side today, guys. Once again, thank you for being with us. Join me again tomorrow, same time, same place for a new round of market talks. And we're going to have Neil Wilson joining us from the heart of London, Chief Market Analyst at markets.com. This is it for today. Until tomorrow, remember to trade responsibly and may all your trades be in the money.